JG, the world is so much better. Our problems have all come to an end. Interest rates are coming down. Inflation is coming down. And we just took on this huge project that Canada did where we are actually going to supply internet to all of our rural areas. And we're saying no to Starlink. We're doing it on ourselves because that's the smart thing to do.
The world is a better place here in 2024, heading into 2025, might I add. Ladies and gentlemen, welcome to episode number 48 of REIN It In, and we got an action-packed show for you today. We're talking about the brand new CMHC headlines that have just come out fresh off the press. Talk about affordability. We talk about the perfect plan that the government is executing and doing so well, Patrick. We're going to talk about unemployment and the realities of the economy, and then we're going to finish with some population growth, what's happening in Alberta, and what it means to you as a real estate investor. So strap in, get ready. It's going to be a good show.
Action-packed. So if you're liking REIN It In, make sure that you like, that you subscribe. Let us know what you like, even what you don't like. Hit that button and subscribe. So Justin Trudeau decides that we're going to handle all of our internet or wireless services, right from Canada. He's putting, I don't know how many hundreds of millions or billions into it. I've lost track. Anyways, somebody reaches out to Elon Musk and goes,
Elon, what can we do? What can Starlink do for Canada?
He goes, we'll deliver that for less than half of what your budget is. And of course, then all of the trolls come out and go, oh, we're taking it outside of Canada. And why would we give it to Elon? People forget that Elon is Canadian at one point. And so anyways, long story short, it really is a breakdown of trust. I would trust Elon to deliver on something that he's already proven to deliver on, as opposed to our current government, which every time they write a check for something like this in terms of a project or an infrastructure project, it goes off the rails, it shuts down. It's kind of like the EV thing that they did. Anyways, so my vote is pass it over to Elon, let him do what he does, flip the switch, turn on rural Canada, and away we go. That's my vote.
We should ask actually in the comments to see where people are. Should you vote for the Canadian government? Should you vote for Elon? I don't know. Put it in the comments. Let's find out. Let's find out what people are thinking. I can tell you though, Patrick, that myself as a Starlink user, I live in rural Canada. I've had Starlink now for 2 years, and it has been flawless. It has been incredible. I get speeds in the hundreds, 100 or plus megabytes per second. And it's absolutely fantastic. It's great. And if I want, I can pack it up, take it with me. And that's fantastic.
There you go.
Let's talk about this, Patrick, which is the upcoming, what just got released. And this is hot off the press. Just happened this morning. Federal government raises insured mortgage cap to $1.5 million and extends to 35-year amortization from 25 to 30 years. It went from $1 million cap to $1.5 million cap, which is very, very, and this is first-time homebuyers, by the way, which the first thing that goes through my mind, Patrick, is I'm sitting there reading this thinking holy, people are actually buying their first home at $1.5 million. That's a far cry from my first home at a couple $100,000. And I was stretching to pull that off. And I'm thinking, wow, where have we come where your first time home is now $1.5 million?
Well, $1.5 million with only 10% down, and then amortize it for 30 years. Now, 30-year amortization is not new, but 30-year amortization on whatever the math works out to, about a $1.3 or $1.4 million mortgage seems a little rich, but that does in fact keep everybody indebted for an extended period of time. I don't know how much uptake we're going to have on this or what limit's going to be pushed. I mean, certainly from a developer point of view, maybe then it helps the math make more sense. So in other words, we're going to build this, pre-build it, whatever the story is, and people are going to step up and buy. I don't know. It's an interesting thought process. I'm not optimistic about it, but I'm rarely optimistic about any of these government programs.
I'm not shocked that you would say you're not optimistic about it, Patrick, but I got a couple different thoughts on it. So, and let's dive into it, which is the first and foremost. The thing is that there's no doubt this is a vote buying promise where it makes splashy headlines, it looks fantastic, it speaks to first time home buyers. Is it going to have a meaningful impact? To be seen. But really the impact, if you think about it, yes, it allows these first time home buyers, some of them that are going to get in at $1.5 million or up to $1.5 million, which just seems like a hell of a stretch. they're going to now pay that mortgage for 5 extra years. And instead of paying $1 million mortgage, you're paying $1.5 million mortgage for 30 years. I wonder what the cost of borrowing is on that, Patrick. I haven't had the time to do the math, but like the banks that are lending this money and CMHC himself, which actually insures these loans, I'll tell you who's making the money, and it's looking a whole lot like them.
Oh, there's a big surprise. That's an incredible. I think I'm going to have a heart attack and die from that surprise.
Yeah, CMHC is very profitable. I think the math is 25% more at a 30-year amortization versus a 25-year amortization. I don't know that. I'd have to check that math, but I believe that's what it was. I saw it somewhere that somebody had done the math on it, and it was an extra 25% that you paid on a extended 5 years of a 25-year am versus 30. So there you go. Somewhere in that neighborhood. It's a lot.
If you're a current investor, you currently hold real estate, own real estate, I think, Patrick, this pushes up prices because that's what it's going to do. Anytime you make those payments
smaller, make it more affordable,
because you're reducing payments, it just pushes the market up even more. We saw that during COVID. That's why the prices got so COVID crazy, is because people had mortgages like I had someone reach out to me at Vistor the other day, 1.6% mortgage locked in for another like a year and a half, by the way. I mean, what an incredible gift. Their payments were a fraction of what they would be today. Of course, they don't mind paying $1.5 million for a property when the payments are kept so low. And this amplifies that because, and for us real estate holders that currently own real estate, it's going to push up prices. That's what I think is going to happen.
Yeah, it could be. And I think there's a couple things about this. First off, when we look at what's going on with mortgages right now, let's talk about that for a second, because mortgages right now, banks are getting really competitive. They've got to lend out money and they're getting competitive. I'm hearing stories of 3.99 on a 5-year fixed. Don't know what the conditions around that are, but literally low fours. Well, so that's a bit of a game changer in terms of that kind of strategy. And when you look at 1.5, but here's the thing about it, is that if you take that strategy, and although you look at British Columbia, Vancouver/Toronto, where prices are elevated anyways, what if you take some portion of that 1.5 and actually engage in the self-funding house strategy, where you're actually building that house, you're putting that additional ADU, you're putting that ADU in there, whether that's a suite or a coach home or whatever that might be that you've got on that particular property, then you can start to make the math make more sense. I don't know. I think that might be an opportunity on the self-funding house strategy to put that ADU in there, I think. But who knows what the conditions of lending are, and it may not qualify if you do that. Who knows?
Yeah, I'm not sure on those particular conditions. So you're right. We got to look into that, Patrick. But I love the ADU. I love the double ADU concept. I was sharing with someone the other day. We took this single family home. We put a suite in the basement. We then added a coach home in the back. It's a total game changer. You're talking about generating $6,500 to $7,000 from a single family home perspective. It's incredible. The numbers are a game changer. This, and I agree, Patrick, but this is where, let's assume for a second, and we may be making the wrong assumption, but just play this game with us, folks. Let's assume for a second, Patrick, you can use this money to go do those ADUs. Let's just say, what's that going to do to those single family pricing? That's going to push them up like crazy because you can generate $6,500 to $7,000 of revenue from them. So the price are just going to go up, 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 and continue in that direction. Good thing for us real estate investors.
It is. And I think, too, is that we have to consider that when you look at the strategy, we've said many times, and folks, this, we stay there, we go, there is no bad times to invest in real estate. There's just the wrong strategy given what's going on economically. And given what's going on economically, it's been this way for a long time, but it's really there's no option. You need that ADU, and you have to look at, say, how do I, in fact, increase the revenue for that? So back to what you're talking about, JG, which is, you have a basement suite, you have a coach home, you're actually investing or buying a piece of real estate or property that you can actually do that. That's the strategy. And that's what I think people have to shift. Investors have to shift how they're looking at what's going on economically. I think when you look at this 1.5 and what you can do, and we'll talk about affordability in a minute, but when you look at what you can pull off in Alberta, for example, Saskatchewan, Manitoba, holy cow, that opens up a whole new door of opportunity taking this strategy, using that CMHC financing. But here's the issue. The issue is going to be, is it only for first-time home buyers? And I'm not 100% sure it is. I've heard different. It's still too new to know for sure.
Yeah, we do have to look into that for sure. And let's be clear, Patrick, this $1.5 million cap that they've raised from 1 million to 1.5 million, this makes a difference in Toronto. This makes a difference in Vancouver. Does it really make a difference in Airdrie or in Red Deer or in Lethbridge or in Winnipeg or in Thunder Bay, Ontario, or in Timmins, Ontario? Nah, not really, because prices don't go that high. But in Toronto and in Vancouver, it does make a difference. Now, this takes me to my last point about this, which is like, if a first-time home buyer is buying a $1.5 million property, Patrick, I mean, that is a whack load of dough for a first-time home buyer. I'm not even sure they should be allowed to buy a $1.5 million property. They should be forced to buy a $150,000 property and put sweat equity into it and then move up to a 1.5. What happened to those days? It seems like we've lost our way with those days where you put in sweat equity the same way I did, the same way you did, Patrick.
Yeah, those days seem to have shifted for the most part. And it is what it is. I mean, we have to look at what the market is and then, like, play the hand that we're being dealt as investors. So I look at it and go, we need to unpack this a little bit more, see what the opportunity is.
Now, in that article, Patrick, when I ran across it and you and I were exchanging texts about it, in that article, I saw this headline about these blueprints that are being released later this year in December 2024, the blueprints for the Renters Bill of Rights and the Homebuyers Bill of Rights. You know anything about this, Patrick? I mean, I don't, so I can't speak to it too much.
No.
Just the headline itself infuriates me, but let me not get into that. Do you know anything about this?
No, I'm like you. I know it's out there. I know it's on the table of being discussed, but I don't know any of the details or any of the proposed details that are, on the table. I don't know that yet, but I have heard about it.
Wonderful. Now, Patrick, one little side bit, and this isn't on our agenda, but you remember I was having that issue with that one municipality that I had to take to court? You remember the land tribunal?
Yes.
That happened, by the way. That happened this week.
How'd you do?
We won.
You won. Beautiful. So that only cost you time and money, all to come to the conclusion that you
$20,000 to be precise is how much it cost me. And here's the most part, and you can be as pissed, listen, I'm the most pissed off about it, but here's an example. This is a real world example of the crap that the municipalities do, okay? They conceded their case and we essentially came to an agreement. They conceded their case. They didn't even fight their case, Patrick, okay? Because they knew they were going to lose, which really pisses me off. They then put in their agreement that they would essentially not fight us if we agreed not to sue them for the costs, which I'm really caught in a catch-22 there. It's like I'm 100K into this project yet. I haven't even put a shovel in the ground, not even close. And do I sue them for costs, or do I just like finally move this project into the, put a shovel in the ground? So it's like this really tough decision to make. But the point is that here you have a municipality that knew they weren't going to win. It was bullshit the whole time. They knew that. We took them to task and they conceded. And in the end, we're going to get what we needed. But why did we have to go through all that? Why did I spend 3 years of bull, almost $100,000 of costs? All of these costs are going to be passed on to the homeowners and to the renters. And it's not good for anybody. Nobody has won here. And this is the reality of why we have a housing supply problem in this country right now.
I feel so helpless.
100%. And we know that. And again, it's bureaucracy, and bureaucracy needs to justify. So this is the challenge that we face. And then when we look at what's transpired over the past 5 years, we've talked about this many times, when we look at all these jobs that were created and we look at unemployment and employment, and we're going,
wow, it doesn't look so bad.
And then you start to unpack the numbers and you start to see that, 80% of the jobs that have been created over the past 5 years have been public service, which part of that public service is administrative or bureaucracy. And I always say, and I know it sounds a little bit, it is negative, but ultimately bureaucracy justifies themselves by doing what they did to you. So that was what keeps them busy. That's what they're supposed to be doing. But of course, for entrepreneurs, For capitalists, it causes a problem. So that's what it is. But it is what it is, and it is infuriating. It just seems so unreasonable.
Yeah, and you know what? At the end of the day, the fact is that there are big developers out there, and Visture is not a big developer by any stretch of the imagination, but we're also not just a regular mom and pop either. But the fact is that most of these, Visture had the foresight and the ability to fight this, but the average mom and pop would have gave up on this, Patrick.
That's what they count on.
That's what exactly. That's what they count on.
Yes.
It would have wasted tens of thousands of dollars of taxpayer money as well as the individual's money. It wouldn't have added any supply to the market, and the whole thing would have died on the vine, which quite frankly is a tragedy. And luckily we had the foresight to go through it, but now we're $100,000 into this thing. And yeah, we're going to end up adding 6 amazing rental units on this property, but it just didn't have to be that way. And it frustrates me, but we won, so that's the good news.
We could trash talk the government all day. Oh, speaking of trash talking our government, let's talk about how interest rates are down, CPI is down. According to Chrystia Freeland and our Prime Minister, their plan is working. I mean, how much better can it be? It's because their plan is working that interest rates are coming down and inflation is coming down. They've got this handled, except for they missed one point, and that is that interest rates come down when economies are struggling. So if your plan was to crush the economy, I guess you're on point. We have to look at this for what it is. And when we look at interest rates coming down as investors, we love it. Interest rates, great. We're not carrying as much load. We can make cash flow. But ultimately, we have to lift the hood under why are interest rates coming down. And by the way, JG, I don't know what they are today, but I looked at bond yields yesterday, 5-year bond yields yesterday on the 15th, I think it was, or the 16th, and 2.68. So
they have tumbled from like 2.92 in a couple weeks to like 2.68, which tells you, in case listeners don't know, this is an indication of where fixed rate mortgages are going. The 5-year fixed rate mortgages, this is an indication of where they're going. Already down by 0.3, 30 basis points. That's incredible, Patrick.
Well, and I think that again, as investors, we say, okay, great, we're going to get some relief on the interest rate side of it, but let's not miss the point of why and how come bond yields come down. And the bottom line is bond yields come down when the economy starts to get challenged. And that's what we're facing right now. So the underlying, tide, if you will, or the underlying current is not good. The trajectory is not in the right direction. And we have to pay attention to what's going on and in terms of how we lift the hood. Now, I just wanted to say that straight out. The sarcasm part of that is that our government literally believes, or at least their narrative is that they've got this all handled. It's all part of their plan. But that just really shines the light on their incompetence. So that's any government, we can look at that. Ultimately, for us as investors, interest rates are coming down. Good. Inflation is slowing down. Not that prices are coming down, although some prices are coming down, JG. You know something? Fuel's down. Rents in Vancouver are pulling back a little bit, and even in the Lower Mainland. So
I'm going to be doing a rental market update here. Unfortunately, I couldn't be at the REIN member meeting this month or next month because of other engagements, but I am going to be doing a rental market update. I'll release it on YouTube because definitely we've hit rents are sliding back for sure. And we are seeing a lot of investors making the wrong decision as it comes to rents. And I'll talk about that in the rental market update that I'll release probably this week, in fact.
And we've talked about it before, is that when we look at student housing, of course, now they've changed some of the allowances for who they're going to let in the country as students. Now they're not being able to put 10 students in a room, or there isn't 10 students to put in a room. So that's been cut in half, whatever the numbers are. So we're hearing more and more anecdotally about investors who had student housing who are now struggling because there isn't as many students to cram in their overpaid.
Patrick, I called that. How many months ago did I tell you that was going to happen? How many months ago did I tell you this was going to happen? I knew this was coming. And actually, I'm seeing in a couple clients at Visture, we're getting $900, $950 per room on some of their student rentals. And we're not huge into student rentals, but we do have a couple that we manage. And I've been telling our clients, listen, you're going to struggle. Like, you're going to have to reset your expectations. And you know, the ones that are smart are readjusting their expectations. Some of them we're repurposing, putting them back on the long-term rental market, which I always think is a good strategy. And some people, though, and this is the mistake that clients are making as it relates to their rents, their rentals, student rentals, very similar, is they hang on to an old story, Patrick. You and I talked about it. They hang on to this old story that,
oh, I once got this, I once did that.
You have to adjust to the current market conditions. And if the current market conditions allow for that rent, great, you can get it. If they don't, there's no point in fighting for an old story. You're just wasting time. You need to adjust and pivot.
Pivot! Pivot! Pivot!
So, Patrick, here's a great topic, great chart that you and I went through, which shows you the home prices versus income. It also shows you, and what I like specifically about the chart is some of the sideways momentum and some of the pullback that have happened over the years, and kind of why we're bullish on real estate as it continues. Tell me a bit about this chart from your perspective, and then I got a couple other things I want to inject into this.
Well, JG, as you know, I've been in this real estate market for 25 years. So when I went and I looked at this particular chart, it became apparent to me that I looked at those times that are circled, and they're estimates, you know, it's within that range where the market pulled back a little bit. It slowed down, it pulled back, prices came down, things slowed down, and people just shut down. They freaked out. There was all sorts of controversy around what was happening in the housing market, and they added tax, and it was, you know, especially when we were seeing what was going on in BC, they were trying to slow it down, and it was foreign buyers tax, and then it was what we call jealousy tax. They were adding taxes all over the place, and of course it was slowing down the market. But here's the reality of it, is through those times, everybody, or not everybody, many stepped to the sidelines. We've been talking a lot about that even right now, is everybody stands on the sidelines going, oh my gosh, the world's coming to an end. All we have to do is kind of step back, expand our view, and we start to realize that every pullback was then, followed by an increase. And then we look at it and we go, well, how come we didn't see that at the time? And damn it, next time the market pulls back, I'm going to jump in. And then market sentiment, then fear kicks in, then the story kicks in, and you stand on the sidelines. But what's interesting, I think, about this, and we don't talk about it enough, but when we look at the Bank of Canada, the feds in the US, what is everybody talking about? 2% inflation. We are committed to 2% inflation. Now, if you were to extrapolate that over this many years, you would realize that it's always more than 2%, although they're committed and they make it look like 2%. They have told us, our government and our central bank is telling us almost daily, 2%, 2%. So if I'm looking at inflation at 2% and I look at housing, I know that housing is only going to go up because they told us it is, because it's 2% inflation. That's worst case.
That's what they're saying. That is what they're saying.
Telling us that. And on top of that, think about the politics of this. Now you look at what Canada, 41 million people now, you look at the number of homeowners that are out there, the number of boomers that own homes. Do you think for a second, and the number of mortgages that the banks hold, JG, I mean, they're putting reserve funds for the third or fourth time, whatever the story is, because they think it might pull back, you know, things are going to go upside down, blah, blah, blah. Here's my point. Do you think for a second that any government or any central bank wants housing prices to come down? Think about that.
No.
They don't want them to come down, especially for an extended period of time. So as much as we're seeing all of this shit happening, I'm looking at it going, you know, number one, they tell us it's 2%. Number two, from a politics over policy, which is their pattern, they're going to choose politics over policy always. They can't. They can't. They'll lose votes. And then imagine the net worth that gets wiped out of the population. So they're kind of talking out both sides of their mouth. And then, of course, the central bank, when you look at what the Bank of Canada's got to do in in Canada's case, we got at least 5 major banks plus the B lenders, C lenders, blah, blah, blah. They can't afford for prices to drop dramatically. Anyways, that's just my view of it. And I'm looking at it kind of, when I step back from this and we look at population growth, we look at jobs, we look at all those things. Got it. Economic fundamentals matter. We got to look at those key drivers. We got to consider the influencers. None of that changes. But on top of that, we have to add one kind of component that we often or have not been adding in a real kind of forthright way. And that is government and Bank of Canada does not want our real estate prices to come down.
100%, Patrick. A large chunk, not a large chunk, the majority of people's wealth, and I'm not just talking about real estate investors, the average Canadian, the bulk of their wealth is kept in some version of real estate, because it's not just people that own real estate, Patrick. It's not just the homeowners and the landlords and the property owners. It's not just them. It's all of the other investments that plow into the mortgages, right? Because don't forget who holds those mortgages. Those are all mortgage-backed securities, which means somebody may not necessarily be directly impacted by real estate. That's it. They don't own a home. But if they have some mutual funds, some of that money is definitely in mortgage-backed securities, which means it's all tied to it. And we saw when it goes wrong in the States there in 2007, 2008, how fast it can unravel. But the point, that's why they came in and saved the day, because you can't let that market unravel. Too much of people's wealth's in it. It's just impossible. So they won't let it unravel. That's for sure.
That's how I see it. And when we look at right now, when we look at this circle in 2024, the pullback, real estate's coming to an end. I mean, the headlines, the narrative that is out there by many in the real estate market, this was inevitable. Of course, it's going to crash 40, 50%. Yeah, we're definitely off peaks. But when you look at even this particular chart, we're not way back to 2015, 16, 17, 18 numbers. I mean, we pulled back, and those are pullbacks in key markets, for example, like Toronto, which is driven by a condo market that's upside down. So it's a particular sector and a particular property style. Right now, JG, and we've said this, and I will say it again for the REIN community, single family real estate, and I mean single family as in 5 units or less, is the new gold. It is a rare asset, and they're not building any more of it, it seems, or very little of it. So for those of you who are still investing and continue to invest in real estate, we look at what's happening in the market right now, shift your strategy, get that ADU or 2, whatever it is on that particular property. But when you get that detached or semi-detached single family, that I think is the new gold going into the future. And that's what we're doing as real estate investors.
I think you're bang on, Patrick. I mean, I know that's been part of my strategy for sure for the last 15 years. And I just did some quick research there during your last segment, which is 76% of Canadians' net worth is tied into real estate. And if you include the mortgage-backed securities in the markets and the secondary markets, it's up to 85%, Patrick. 85%. So you always say that a huge part of our GDP, and I believe for a while there it was like 12, 13%. I think now they got it down to, I forget, is it 8% of the GDP is essentially associated to real estate, which is a ton of our GDP. But 85% of the people's wealth, including those politicians, by the way, their wealth too. So this thing ain't going anywhere. It's going to go sideways. It has been going sideways for a little bit, but that's the end of that. And I think that, and it's funny, one of the real estate agents that I work closely with, she has her own analysis, as do many agents. And in her analysis, she was saying that she figures August was, because of the recent price drops and the activity that's now starting to spur up on the market, she thinks August was in fact the bottom of the price, the bottom of the pricing in her particular market, which is in the Durham region, Clarington region, just south of Peterborough, which I find interesting. So, and Patrick, that's something you and I, and that's a tactic that real estate investors, and we've been saying this for years, is investors should never try to time the bottom of the market. It's so hard and next to impossible to time the bottom of the market. But I tell you, every indicator is showing us we are near the bottom. I'm not saying we're at the bottom. I'm saying we're near the bottom, and it's a great time if you have a 5-year, 10-year, 15-year outlook. It is a phenomenal time to get into real estate.
You know, you can't be more right. If you're going to get into real estate and you have a long-term view of what's going on, and again, being very specific about property types, as in ADU, minimum, duplex, triplex, that kind of thing, and detached, semi-detached, you have got a future in the world of real estate, just given the nature of what is going on economically. Now, here's the thing about what you said about timing the bottom of the market. Different markets, what's happening regionally is going to say, okay, well, is this the bottom? I don't know. But what is happening in all of this, JG, is deals are there. Motivated sellers, motivated vendors want to get from underneath projects. And so there is opportunities for buying. It's not like you're walking down the street picking them up. If you dig for them, they're 100% there. And I think that's where investors got to really pay attention to what's going on. And if you got a long-term view, you're going to do absolutely fine. Buy for cash flow, follow the system, follow the process. Don't speculate, and you're going to do just fine in the world of real estate, given what's going on.
I want to say one last thing about this, Patrick, before we end this segment, which is you talked about inflation at 2%, which pretty much pegs where you know the long-term average is going to be of real estate. What a lot of real estate investors don't realize, and you and I know this, and those that have run the numbers know this, is for real estate to do extremely well for you, your real estate should inflate somewhere between 1% to 3% per year, and you're going to kill it in real estate. That's it, just 1% to 3% per year. You don't need 10, you don't need 50, you don't need 20%. Crazy, inflation in real estate, just 1% to 3%, and the Bank of Canada is telling you it's going to be at least 2%, which is a no-brainer, Patrick.
Yeah, and I don't remember the exact thing, but 2 or 3% over the course of the year with leveraged money with 20% down translates to about 14% ROI. So that's a quick math rule of thumb. It's pretty accurate, 2-3%, and that's with no cash flow, by the way. So not a bad ROI.
What a fantastic ROI. What do you mean not a bad ROI? Warren Buffett, the greatest investor of all time, has been averaging over the course of his 120-year career. It seems like he's been doing it forever. Has been averaging under 22%, Patrick. And if you can get 14, 15% and keep that consistent, you're going to do extremely, extremely well. There's no doubt about that.
Here's what we know about this economy right now. Yes, there's headwinds. There's lots of riptides kind of under the surface that are going on. As long as you're paying attention, you're going to be fine. This too shall pass. Will there be some pain along the way? 100%. When we look at the construction industry, what we're already hearing about is many construction jobs. Those guys are sitting on the couch or at the union hall going, okay, if we got some work, particularly when we look at what's happening in BC and Toronto specifically, those builders are shut down. And on top of it, of course, there's at least 30 now developers that have gone insolvent and or bankrupt. That's going to continue. We're hearing projects in Vancouver, developers are going bankrupt. There's not there's no pain and it's not easy, but as investors, if we can just get out of the fray, look at what really is happening, put our capital to work in the right asset class, do it strategically, there's still such huge opportunities going on right across the country.
100%.
Hey, so JG, what do you think? These aren't rose-colored, but those are pretty rose-colored glasses, don't you think?
Those are some good rose-colored statements you're making there. I think I don't know what you had for breakfast, Patrick, but I kind of like it.
I'm a little dovish today. I'm, me and Tiff,
Yeah. It must be you must have got a mortgage renew at a lower rate or something. That must be what's powering this. I don't know.
So we know what makes the world go round, and that is jobs. And whether that's the real estate world, the retail world, it just doesn't matter. Economically, we got to have jobs. And what we're seeing is the unemployment rate going up. And what's interesting about all of this is that we are having challenges sorting through the data, because they say, well, we had net 20,000 job gain. And then when you unpack the numbers, you realize that, well, there's only about 5,000 of those were full-time jobs and the others were part-time jobs. So it's really them painting a picture that makes it look better than it really is. So when we look at the job market, we have to look under and really kind of lift the hood on that, unpack it, get into the details. All to say this is that when we look at what's happening in Ontario, we see that economy right now from a jobs point of view is probably the worst within the country, within Canada, because of, again, when we look at what's happening specifically in Toronto, some of the GTA and the meltdown of that condo market. And meltdown is not an overstatement of what's happening in that condo market, by the way. So we're seeing the effect of that in Ontario. When we come over to British Columbia, we're starting to see it pick up. It's still under 6%, I think. What is BC?
5.8% in BC.
But that's an increase. Again, it's ticking up, ticking up, ticking up. And when you look at what's happening in Alberta, for example, which has got one of the strongest economies, what's interesting about that at 7.7% is that we are, in fact, seeing where it's difficult getting part-time service jobs. So it depends on, like, what are the jobs that are available? We still have this fundamental problem, which is we have huge supply of human resources because people are pouring into the province. Well, they're pouring into the country, but use Alberta as an example, and there's not enough jobs to go around. So when we look at what's going on in SMEs, they're not confident in what's happening economically. We look at interest rates, they're still high enough that they're not investing in their own infrastructure. They're not creating new jobs. So the problem that we've got on the HR side of things is we've got far more supply of people than we do demand from the job side of it, which is going to skew the numbers a little bit again. So you really have to pay attention to what's going on with the numbers. Again, kind of peel it back and see what's really going on. So none of it is great news, but it's also not as bad as the numbers would indicate.
Yeah, interesting, Patrick, that like you said, Alberta is actually in terms of like unemployment growing, they're the fastest of the big provinces, let's say. I mean, I'm not counting Newfoundland and stuff like that. They're in Nunavut, I'm not counting them. But, they're the fastest growing. And the reason, you just nailed it, but look at the growth, the percentage growth of the people coming into the city. I mean, listen, Cochrane and Airdrie, 30% growth in population is massive. And I can see why even Edmonton, which, like, listen, Edmonton is a multi-million person city. It's a big city. It's not like you're going from 100,000 to 130 or from 30,000 to 33,000. Edmonton's huge, and you're getting essentially a 13% growth in population, which is absolutely huge. And that's not helping the unemployment numbers in Alberta, that's for sure.
It's not. And it's also in the case of, Edmonton, we'll talk about Edmonton. I'm going to be there on the weekend speaking, but when you look at what's happening there, it's really crushing the infrastructure. They can't take it on. Edmonton's struggling because they've got all these infrastructure projects. They don't have enough money. Edmonton's really controversial right now with where they're at economically. All to say this, that we have a lot of people moving into the province of Alberta as an example, and we start to see that number one, they need a place to live. So if we're rental housing providers, that market's very, very good. And we see the opportunities. Affordability is the driver of this. And JG, back to some of the predictions that we made 4 and 5 years ago, we were talking about Alberta. We talked a lot about Calgary. We talked about Edmonton, people are going there. Why? Number one, you've got affordability. You don't have this. You have a better tax advantage because of provincial sales tax. So that's just to say a couple of things. You have jobs that are there. And quite frankly, you've got a better government leadership. Whether you believe in Danielle Smith or not, she's doing some great things. I don't want to be political about it, but ultimately, that's what people are attracted to.
Interesting, Patrick. And I'm just, while we're talking about Alberta and I look at the percentage growth of these cities, I mean, one of the things Alberta had a lot of pre-COVID and pre-kind of ramp up we've had here in Alberta. Don't forget, it was 2020, March 2020. You and I were on stage in Calgary, Alberta, saying, don't worry. Of course, COVID wasn't a thing, or at least we didn't know what COVID was going to be at that time because it had just become a thing, but we didn't know a lot of the things we know now. Point is that we said, listen, don't worry, Alberta, you're almost out of your slump. You will get better. And we didn't know COVID would accelerate it in a big, big way. But one of the things Alberta has always had a lot of is inventory. It's had a lot of condos, as an example. A lot of stuff sits on the market, has sat on the market. Is all of that getting snapped up now? Like, are all the condos over there getting snapped up? I mean, this is huge population growth, man. Like, 4 to 5%, 3, 4, 5% is huge growth. We're talking 10, 15, 20% here. It's ridiculous.
Yeah, Calgary, of course, their condo market is being taken up. A lot of those condos, a lot of actually pre-built was being having a lot of Ontario and BC money going into Calgary, into that condo market. I think that will set itself up to implode in about 4 or 5 years from now. You're going to be hearing a lot of stories. Having said that, when you look at affordability and that's on the investor side of it, by the way, Edmonton doesn't have that same degree of uptake on the investor side of it in the condo market because that condo market continues to be saturated. Having said that, you look at what's going on in Edmonton, JG. I was just talking to a realtor friend of mine the other day, and you can buy a nice, I don't want to qualify it. You can buy condos for 60 and 80 grand in Edmonton.
No.
Yes, and when you look at it, may not be the nicest place, but if you're looking to rent and you say the cost of rent versus the cost of having a place I can call my own, there is seeing some uptake in that market as well. So it's interesting that when you look at what's going on in Edmonton, all to say that we're starting to see exactly what happens historically, and that is that Edmonton follows Calgary 18 months to 2 years later, we start to see. And if you follow the charts, you're actually seeing that Edmonton, from a price point of view, a sales point of view, is starting to follow the path of Calgary, albeit a little different than it has in the past, but conditions are different as well.
Yeah, well, and time will tell. Time will tell. I want to end, Patrick, with a good old-fashioned Patrick prediction here. So let me hit you up with a question, which is, do you think we're going to have a fall election? Patrick prediction, are we getting into a fall election? There's a lot of noise out there right now.
Well, are you talking about U.S. or Canada? Because Canada's 2025.
No, yeah, but now that they've ended their pact,
forcing one, not a chance. No way. I'm not even. That's the last thing on my bingo card. But maybe I'm wrong. I hope I am.
Now, so how do you think it's going in the U.S. there? I mean, we know they're having November 5th is a big day, and my gosh, the headlines are getting wild out there. The closer we get, it's getting crazy.
Well, I think there's a few things. Number one, I think we have to consider the fact that we can't ignore the fact that things between Russia, Ukraine, NATO, the U.S., China, Taiwan, everything is escalating. I have a tendency to believe some of the guys out there that are going, there's not even going to be a U.S. election, there's going to be a war. Now, that's how close things appear to be if you're kind of following that train of thought and looking at what's happening, what Putin's doing and Zelensky's doing, and the fact that all of these leaders came together and said, long-range missiles, we're okay. You can go into Russia. Are you familiar with this whole story on the long-range? Okay, so basically what NATO and the U.S. said is we're going to change the agreement so that we can put long-range missiles, Ukraine and NATO can put long-range missiles like cruise missiles, I'm assuming, into the heart of Russia. Putin has said, you do that, and this is an act of war. So they're literally on the razor's edge of coming off this point. Now, what does all of that mean? Well, it all means that if that happens, we're going to see, back to a prediction I made that I was wrong about, was oil prices will absolutely scream higher. Now, having said that, I thought that was going to happen earlier. So it's just a prediction that's going to happen, I think, later. Having said that, it could take the U.S. election off the rails. It'll be a reason not to have an election. So if you get into the politicking and all the stories and the rabbit holes, that could be a reason not to have an election.
Do you really think, I mean, that's interesting, Patrick, but do you really think they're going to go with no election? I mean, I don't see many reasons, if any, that would happen. I mean, the U.S. values their elections, let me tell you, and so I'm not sure. I don't know. I mean, I'm not even.
I don't know. It's all a little weird, right? We've never been in a position where we have literally the chances of a world war. We're on the cusp of that possibility, and that could delay the election. So we'll see. I mean, there's all sorts of stories around it. Depends on what you want to believe or how you want to go with it. But I think there's a possibility. We've never faced a world war before, so I think it's a possibility. I want to go back to one thing, JG. As you know, as part of my own investment portfolio, I own some precious metals, as well as Bitcoin, etc., but real estate. So when we look at what's happening and we talk about bond yields coming down, and that is not a good sign for the economy, we also recognize the fact that gold is hitting record highs. Gold historically is a flight to safety. So in other words, guys are taking their money out of treasuries, they're taking their money out of the bank. People in general are saying, I'm putting it in gold because when I look at what's happening with the current monetary policy, what's happening with the devaluation of the dollar, with what's happening with the potential collapse of the US dollar, these are all things that are happening or talked about. We're seeing gold hit record highs. So these are all things that are saying, yeah, the economy is, people are really nervous and things are happening. I think we got to pay attention to it just so we make good decisions, which is to say, don't over leverage, buy for cash flow, stay in the market, look for deals because that's where the opportunities are.
And just like that, you took your rose-colored glasses off, and now you're back to the doom and gloom.
No.
Doomer, gloomer, boomer mentality. Come on, Matt.
I am not a doomer, boomer, no, doomer, gloomer, boomer, whatever the hell you call me. My point is that I'm still looking at it through rose-colored glasses. I'm just saying is that this is what is potentially hanging out there. As investors, we have to say, okay, how do we hedge? How do we risk mitigate? And so I'm just giving you some insights, some things to look at.
Love it. All right, folks, hopefully you've enjoyed episode number 48 of REIN It In. Patrick, thanks so much, and what a great show.
It was a great show. Thanks, JG. Thanks for leading the way. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.